Hey everyone, welcome back to the channel. March 2026 was the most significant month in this channel's history. Not because it was perfect, there were losing trades, there were weeks where distributions dipped, but when I added everything up, dividends, options, the full picture, something shifted. This is the first month where my two income engines, passive dividend income and active options trading, ran simultaneously for an entire calendar month. And I want to show you exactly what that looks like. Let me break it all down for you. Dividends, options, and for the first time, the annualized yield on every single position. Because one of you left a comment last month that completely changed how I present this data. Let's get into it. Before you go anywhere, a few things I need you to hear. I am a Singapore-based investor. Every dividend figure you see in this video is net of 30% US withholding tax. If you are a US investor, your gross numbers will look higher than mine. The portfolio snapshot was taken at the end of March 2026. Numbers change daily, so what you see here will differ from what you see right now. Most importantly, this is not financial advice. I'm not a financial advisor. I'm documenting my own personal investing journey for educational and entertainment purposes only. Please do your own research. Invest based on the risk tolerance and financial situation. Do not copy my trades blindly. Alright, with that said, let's look at the numbers. Now, let me give you the headline first. Then we'll unpack everything. The dividend income net after 30% withholding tax was $2,215. If you look at the gross dividend income, that was $3,165. The options trading realized profit and loss is net positive $4,202. So the combined March income was $6,418. So if you look at the combined income of $6,418, it's more than 3 times what my dividend only income was in February. I'll break each stream down in full. Let's start with dividends. I want to start this section by acknowledging something. Last month, one of you left a comment that made me rethink how I present this data. The comment said, I don't think it matters to me how much each stock or ETF gives you in dividend, but it would help me to know what the annualized dividend yield is based on the dividend and the average price per share. That tells me more about the stock than how much you received. So from this month on, I'm presenting not just how much I received, but the estimated annualized yield that each position delivered in March, based on the actual distributions and approximate share price. Because the yield number tells you something the dollar amount cannot. A $100 dividend from a $500 investment is a very different story from a $100 dividend from a $10,000 investment. Context matters. Here's the full breakdown. I'll start by showing you the top contributors. I'll put the full dividend table on screen. I won't go through every ticker and dividend one by one. You can pause the video here or check the Snowball Analytics link in the description if you want to study the full portfolio in more detail. Now let's talk about what these yields actually mean. I want to walk through some of the more interesting numbers in that table because yield without context is just a number. Let's talk about ULTY. The annualized yield is estimated at 51.5%. ULTY is still my biggest dividend contributor, $364.23 or 16.4% of all the dividend income. And at 51.5% annualized yield, it looks extraordinary on paper. But here's the context. ULTY started at a much higher NAV when it launched. It has experienced significant NAV erosion over time. What that means is the fund is partially returning your own capital back to you in the form of distributions. So while the cash flow is very real, the underlying value is declining. I hold ULTY for its cash generation, not for capital appreciation. If you are considering it, you need to go in with eyes open. High yield here comes at a cost. Next, PLTW. Annualized yield 50.2%. PLTW is a single stock covered ETF on Palantir. At 50.2% annualized yield, it has been one of my most efficient income producers per dollar invested. 5 weekly distributions in March, but single stock concentration risk is real. This is leveraged to Palantir's volatility. Next, MSTY at 68% annualized yield. MSTY is a covered call on strategy. This is one of the highest yielding positions in my portfolio. But strategy's wide swings means the distribution rate changes dramatically week to week. You can see from breakdown that MSTY paid between 24 cents and 31 cents per share across the 4 March payments. Exciting but volatile. Next, NVYY, annualized yield 71.1%. NVYY is an NVIDIA's U-Boost product built on options on NVIDIA. High yield but subject to NVIDIA's movements. The tech sell-off in March showed up in NVYY's fluctuating weekly payments. Next, let's talk about the conservative anchors. SGOV, my T-bill ETF, sits at 2.3% yield. That is intentional. SGOV is not there to generate high income, it's there to stabilize the portfolio, provide cash drag protection, and support margin requirements. It does its job quietly. QQQI at 10.2% and Strike, Strategy's preferred stock, at 8% are more measured positions. They offer income without the extreme volatility of some of the other ETFs in the portfolio. Looking across all 28 positions, the one with the highest annualized yields, ULTY, MSTY, NVYY, HUI, tend to be single stock options based products. The ones with moderate yields, QDTE, YMAC, CHIPI, are basket or multi-stock covered core strategies. And the lowest yields, SGOV, are the most conservative. There's a pattern there. Higher yield equals higher concentration risk plus more NAV erosion potential. It's not a flaw in the strategy, but it's something every investor should understand before buying these products. Now, we'll go to the income stream that really changed the numbers this month. I started selling options on individual stocks and ETF in January 2026, and in March, I added something new, SPX credit spreads. Let me break both down. So the profit and loss for individual stocks or ETF options came at positive $3,226. The SPX credit spreads came at a profit of $976. So the total options realized profit is $4,202. The individual option strategy involves selling puts and calls on leveraged ETFs and volatile stocks, collecting premium while managing the positions actively. Now, let me elaborate more on the individual stock and ETF options. The individual option strategy involves selling puts and calls on leveraged ETFs and volatile stocks, collecting premium while managing the positions actively. The total realized profits from this category came up to be $3,226. And over here, I want to share a trade that I made about SOXL. Now, SOXY, the 3x leverage semiconductor ETF, gave me the most dramatic ride this month. I was selling cash secured puts on SOXY at a $57 strike price when the market started selling off in early March. The semiconductor sector dropped hard. Those puts went against me and I closed the position at a loss of $375. But here's the thing. I immediately repositioned, rolling down and selling new puts at a $50 strike. That second position, the SOXY 27 March 26 50 put, I managed carefully through the volatility and closed it for a profit of $951.31. So the net SOXY result for March came up to be positive $576.62. A loss turned into a net winner because of active management. That's the disciplined options trading demands. Next, let's talk about some other key trades. TNA, the 3x small cap ETF, was one of my most consistent plays. I ran 4 separate cash secured puts positions across the month at different strikes: 48.5, 43.5, 44, and 42. All 4 trades were managed to profitability. Combined TNA options income $535.01. Next, Yin, the 3x China ETF, gave me 3 separate put selling opportunities in March. All 3 closed profitably. Combined Yin option income $358.72. There were some other notable wins as well. DPST put made a profit of $234.89. PTIR covered call positive $137. GGLL covered call positive $108.71. MSFU covered call made a profit of $174. And TQQQ puts made a profit of $388 across 3 trades. Now, there is one individual loss, and the ticker is IREN, IREN. The first put position closed at a loss of $106.44. I re-entered at the same strike, and that trade made $169.56. The third I ran position made $240.95. So the net I ran result came up to be $304.07. So here's the lesson. Don't let one losing entry stop you from re-evaluating and re-entering if the thesis still holds. Next, this is the part of the video I'm most excited to talk about because this is new territory for me. I began trading SPX credit spreads in March 2026, so this is my first full month of results. So what is an SPX credit spread? Simply put, I sell one SPX option and simultaneously buy another SPX option further out of the money. The premium I received from selling is higher than the premium I pay for buying. The difference is my maximum profit. The distance between the two strikes defines my maximum loss. So here are all my 9 SPX credit spreads trades from March. Now this is a defined risk strategy. I always know before I enter exactly how much I can make and exactly how much I can lose. That structure matters a lot to me as someone who is still building this business. So as you can see from this table, I mostly sell either call credit spread or put credit spread. Now let me zoom in on a trade that lost money because that was the most important lesson of the month. The 6600 to 6610 put spread on March 18 to 19 was my one loser. I opened it on the 18th and the market dropped sharply the very next morning. A move connected to tariff and macro uncertainty that hit the broader market. The spread went against me and I closed it quickly to stop further bleeding. The loss was $732. But here's the important part. I did not freeze. I did not hold on hoping for a reversal. I took the loss, assessed the situation, and continued trading. The subsequent 8 trades all closed profitably. That's the mental game of options trading. You will have losing trades. How you respond defines your long-term results. So putting it all together, here's the full picture for March 2026. The dividend income, net after 30% withholding tax, was $2,215. The gross dividend before the withholding tax was $3,165. The options trading profit and loss came up to be positive $3,225. The SPX credit spreads options trading came up to be positive $976.48. So the total combined income for March came up to be $6,417.54. Now, if you look at my February income report, the dividend income was $1,946.83. That was without options trading profits. So in this March combined income, dividends plus options, it came up to be $6,417. That's more than 3 times February. But I want to be careful not to overinterpret one strong month. Options income is inherently variable. Some months it will be lower, some months there could be net losses. The dividend stream is more predictable. The option stream amplifies, but also introduces volatility. What I believe in is the combination. Dividends provide a reliable base. Options provide an active multiplier. Together, they create 2 uncorrelated income engines running in the same portfolio. Now, I want to be transparent here. 1 month of data means absolutely nothing statistically. I'm still learning. I'm still refining my strike selection, my timing, my sizing. March was a positive first month, but I'm not declaring any victory. I'm declaring a beginning. I still go to work every day. I'm still a full-time civil servant. I have a family to take care of, school fees to think about, life to plan for. This journey isn't about impressing anyone. It's about building a system month by month that gradually makes my salary secondary. It's about the day when I have real choices, not because I quit work, but because I don't need to depend on it. March reminded me that compounding doesn't just happen to capital. It happens to skills. Every trade I manage, every distribution I received, every viewer comment I apply, they all compound. The yield table you saw today, that came from a viewer comment. The SPX spreads, they started from watching, reading and starting small. I'm not done learning. And if you are building something similar, neither are you. Keep going. So that's the March 2026 income report. And now I want to hear from you. Do you think combining dividend investing with active options trading makes sense as a strategy? Or do you think they belong in completely separate portfolios? There's no wrong answer. I'm genuinely curious how you think about this. If this breakdown added value to your journey, please hit the like button and subscribe to the channel. It takes 2 seconds and it helps this channel grow so I can keep making these videos. My full portfolio is publicly available through Snowball Analytics. The link is in the description. You can see every position I hold in real time. Alright, thanks for watching. I'll see you in the next one.